Hello, my name is Ben Robbie, and I am here presenting an investment proposition for two companies in the aerospace industry. Those companies that we're going to look at today will be between the Boeing company and Airbus SE. The presentation, we will go through a little bit about the history of each company, just to give some background content on them, and then go through, look at market conditions, do a little bit of market analysis, as well as examine each company from a financial standpoint, dig into a little bit of the financials, ratio analysis, and then at the end, propose which company would result in a better investment opportunity. So we'll start with the history. And we'll start with the history of the Boeing company. Well-known company, was founded on July 15th in 1916 in Seattle, Washington. Boeing's initial ventures actually started with the military, as they provided aircraft to the Navy during World War I. As well, at the same time, they were also pursuing alternatives for post-mail delivery. The relationship with the military is really what got Boeing its strong start, and they've continued that strong relationship even today. Some of the very well-known aircraft in service, including the B-17 Flying Fortress, the T-6 Texan, which is a trainer aircraft used by most militaries, and the F-4 Phantom. Still, even today, some of those aircraft are in operation and used to train predominantly military pilots. Boeing also has their hands into the space division of aerospace. They purchased Rockwell's International Aerospace and Defense Assets back in 1996, and that included the world's first reusable spacecraft, which was the Space Shuttle Orbiter. Business itself has four segments. The Boeing company includes commercial airplanes, defense, space and security, global services, as well as Boeing Capital. The commercial segment includes all of the regional business aircraft, as well as commercial jetliners, and the cargo freighters. The defense and security segment involves research, development, production of military aircraft and weapons systems for the global strike. The primary customers would be the United States Department of Defense and NASA. The global services segment includes services to provide support. There's a comprehensive portfolio to support both the commercial and defense markets. That includes technical support, modifications, parts, and then training as well to both commercial and governmental customers. That's kind of the background and the information regarding the Boeing company. We'll look at Airbus next. Airbus was actually the product of several European countries coming together to try to stop the United States from dominating the commercial market. Airbus was started after a meeting in July of 1967 when ministers from France, Germany, and Great Britain met. This was right before Boeing was getting ready to launch the 747 to market, which became a very popular commercial aircraft. And so the European leaders thought that the only way they could stop the United States from dominating was to come up with their own air program, and that's how the Airbus 300 program was conceived. Airbus has grown exponentially mostly to mergers and acquisitions. They've acquired major luxury companies such as Bombardier, which is a luxury jet company. They also manufacture across four divisions, which include commercial aircraft, helicopters, defense and security, and space. Commercial aircraft division produces the passenger aircraft. as well as freighter jets and corporate jets. Airbus actually recently completed the maiden flight of its newest freighter, which is called the Beluga. There's a picture of that on the slide there on the history. That's given that name because it resembles a beluga whale. It's actually 63 meters in length, so hypothetically it could transport 2 blue whales end over end. As far as space, it's a broad segment. They deal with UAV, unmanned aerial vehicles, satellites, as well as communication equipment. So very similar companies in terms of offerings, in terms of which components of the aerospace industry that they are involved in. Now that we know a little bit about them, we'll take a look at what the aerospace market has done and what is it's expected to do. That is an important, obviously very important component of any investment, is to find out what the picture has been and what it's supposed to be. So we'll look at the historical growth first. The production levels actually in aerospace over the last 20 years have increased 138.3%. And the travel demand, and this is primarily regarding the commercial segment, travel demand in fiscal 17 was close to 7 times higher than it was in 1981. So exponential growth that aerospace has seen in just the last 20 years. In terms of the customer demand, most analysts are actually predicting that India will become the third largest aviation market by 2025. So one of the main factors in that is obviously international tourism. According to the World Tourism Organization, WTO, there were 350 million more international tourists in 2017 than there were in 2010. And that trend is expected to continue. And regarding domestic travel from the United States, U.S. carriers, the FAA, Federal Aviation Administration, predicts that travel to Latin America, which is the largest international destination for the U.S. carriers, will continue to increase at an average rate of 3.8% through the end of 2038. So international travel continued to grow, and as that continues to grow, obviously that has big impact on the outlook. The average prediction over the next 20 years is that roughly between 30 and 45,000 additional aircraft will be produced. And that is directly correlated to that projected 4.7% increase in passenger traffic. In the defense sector outlook, most analysts believe that revenues will continue to grow. The compound annual growth rate is expected to be about 3% over the next 5 years, and that's largely due to the persistent global tensions that are causing a lot of the countries to expand their defense systems. Global defense spending is expected to exceed $2 trillion during 2022, and 36% of that spending will come from the United States. Both Russia and China have increased their defense spending by a compound average growth rate of 8% between 2011 and 2016. And members of the NATO organization have also been discussing allocating 2% of GDP specifically for defense spending. So in terms of the defense market, the global situation continues as it is, and that sector will follow. Acquisitions-wise, probably one of the greatest threats right now to both Boeing and Airbus is the evolution of the OEM manufacturers. In 2017, just this last year, United Technologies agreed to acquire Rockwell Collins in an effort to consolidate major suppliers and increase their leverage. That consolidation, if and when it is finalized, would give UTC a portfolio that spans into almost every major aircraft system, and that will increase their bargaining power with the aircraft manufacturers. As more of these occur, there is some question as to whether Boeing and Airbus will be able to negotiate costs quite as effectively and manage their supply chains. That aside, also obviously substantial laws and regulations around the aerospace industry, both from local and foreign governments, as well as even revenue recognition. Most recently, the ASC 606 accounting policy that changed, which was around revenue recognition, that has some major implications for people with long-term contracts. So overall, market has seen growth. It continues to grow, and it is expected to grow, which indicates that this is still a good time to purchase in the aerospace. Next, we'll take a look at specifically some financial analysis between each company and then compare the results. For the purposes of the analysis, we analyzed 3 years of company data to determine which one was better equipped, how they were utilizing their resources. For Airbus, we did convert all of their financials to US dollars. We used the exchange rate between the euro and the US dollar effective 10/16. We'll start with the Boeing company. The Boeing company has seen their net earnings over the 3-year period increase by 58.4%. Huge growth in net earnings. Average profit during that time was a little over $6 billion. The operating profit margin also increased by 62.9% during the period, with an average of 6.45% per year. Now, the Boeing company was able to double its operating profit between fiscal 16 and 17 due to the lower forward reach costs, R&D, and also favorable cost performance. During the period, the earnings per share also increased by 80.9%, with an average EPS of $9.61 per share. However, it is worth noting that the average was heavily weighted by the FY17 EPS, which was $13.60 per share. In terms of operating cash flow, they have seen steady increase from operating activities. That's really where we want to see most of that profit. The cash generation is from operating activities. During the period, they increased their cash flow by 42.5% from operating activities, which was roughly $4 billion. The majority of those inflows, they were offset in terms of just cash outflows by financing activities, which primarily during the period were treasury stock buyback and dividends paid to investors. In terms of price to earnings, something that is important in terms of valuation of a stock's price, the price to earnings increased by 12.8% during the period. Boeing stock price in FY15 ended $144.59 per share and ended fiscal 17, 2 years later, at $294.91 a share. So substantial increase in share price. And that, as you know, price to earnings obviously has to do with EPS as well. So EPS in fiscal 15 calculated into the stock price gives a price to earnings of $19.23 in fiscal 15 to $21.68 in fiscal 17. Dividend yield, which just measures how the company is paying out cash dividends versus the share price, they are averaging about 2.56% during the period. So overall, Boeing saw incredible profitability, incredible growth during the 3-year analysis. Next, we'll take a look at Airbus next. Airbus also saw profitability during the period. Net earnings for the period fiscal 15 through 17 increased by 6.6%, with average operating profit of $2.61 billion. Profit margin increased 2.9% with average of 3.33, and that was really what slowed that down was the cost of sales, which increased by 10% in fiscal 16 due to substantial business growth, which reduced their average profit. Earnings per share wise, earnings per share averaged $3.26 with a high of $4.30 in 17 and a low of $1.50 in 16. So operating earnings per share increased 8% during the period. Statement of cash flows indicates that they also saw a steady increase from operating activities. They increased 53.7%, which was almost $2 billion. As far as Airbus, the investing activities represented the largest cash outflows for them due to purchases of capital assets. Price to earnings ratio wise, stock price increased during the time frame as well as it did for Boeing. Increase was 35.3% during the period, which increased from $17.08 in 15 to $23.11 in 17. The average during the period was $28.15, and that is directly attributed to the low EPS in 16, which drove up the price to earnings ratio to 44.27 in 16. Dividend yield wise, also very consistent with just at 1.97% during the period as an average. So what does all this mean in terms of each company against the other? The data really indicates that both companies were profitable over the period, so it's a matter of which company has proven that reliability over time, as well as indicates the greatest opportunity for ROI. Arguably, easily, Boeing's operating profit and operating profit margin were double what they were for Airbus during the period. It's definitely worth noting that while operating cash flows did increase for both, Airbus spent most of theirs investing back into infrastructure and capital assets, while Boeing was spending on repurchasing common stock as well as dividends to investors. Just in terms of pure operating cash flow growth, Airbus did see a greater percentage of growth during the period, so definitely they carry for that one. In terms of earnings per share, Boeing is really outperforming Airbus by almost 3 times. Boeing demonstrated consistent profitability and the desire to pass those earnings on to their shareholder, as evidenced by their dividends. The price to earnings, the significance of price to earnings is it really indicates how much money an investor has to invest in a company to receive $1 of future benefit. And it's worth noting that the analysis indicates that an investor would have to spend on average $8 more per share with Airbus to get the same value that Boeing is offering. And really, dividend yield, Boeing did offer the greater dividend yield. However, it's worth noting that both companies were comparable, and so dividend yield is not a major contributor to the decision. Outside of these ratios, that we can look at the balance sheet and just to see how each company is managing its assets and liabilities. Boeing's current, in terms of current ratio, Boeing maintained at least 1.0 over each period over each year in the period. They had an average of 1.25. Airbus averaged 1.03. However, that average was weighted down a little bit by a lower than 1 current ratio in FY16, and we spoke to that already. On the debt side, debt and equity, Boeing increased significantly from 15 to 17 due to the long-term debt maturities that came due, as well as treasury stock buyback. That could be a concern without doing more historical analysis to determine. Airbus averaged a lot better for the period in terms of debt management Airbus indicated more consistency, while Boeing actually had some heavy implications for DTE. In consideration of all factors, though, clearly the analysis, the information, the data still points to the stronger company, and in this case, clearly Boeing is justified as the better option. Their long history in leadership in the aerospace demonstrates consistency and profitability, as well as the ability to profit the shareholders, and that's what this meeting is about. With the recent decisions on the Treasury stock, the holistic picture still indicates that move was probably strategic in nature and not an indication of trying to flex their stock price. So our recommendation today is to purchase in the Boeing company. What you'll see here in investment decision, Boeing company, the current stock price measured as of yesterday, which was 10/26. Stock price was at $359.27 per share. We're going to purchase 300 shares, which represents a $108,000 investment. Based on dividend yield, we're expecting $2,700 back in cash dividends in that first year. And with the stock growth over time, the average stock growth, we are anticipating that the estimated value of our investment after 1 year to be roughly $131,000, which represents a $23,000 increase to our investment. So strong hopes for Boeing, strong plans. All of the analysts that were reviewed agreed. Now is the time to purchase in aerospace, and if you don't own it, now is the time to get in it. Thank you.